Welcome back, everyone. I hope you're having a great day. And in this episode, we're going to discuss NIO, a leading Chinese EV company who just signed a major agreement to bolster up their manufacturing capabilities to 240,000 units every single year. So if you're a follower of the EV sector, you know it's been extremely volatile over the past year with major ups in 2020 and then a major pullback in 2021. And in the EV space, NIO is a top brand within China, and they've delivered over 100,000 vehicles in the company's history. So in this episode, we're going to discuss NIO, take a look at their current operations, and determine if now is the time to buy the dip on this leading Chinese EV company who's operating in a rapidly expanding industry. So if we take a look at the share price, ticker NIO currently trades for over $35. And on the 1-year chart, the company's still up an insane 922%. And NIO was one of the fastest growing companies back in 2020, growing from only a few dollars per share to a record high of over $64, which is absolutely incredible. But taking a look now, as the entire market has rotated out of the high-flying growth companies and into more value plays over the past few months, we can see that from a high point back in February of 2021, right around $62 per share, the company has now fallen by over 42%, back down to their current level. So in this episode, we're going to take a look at NIO's most recent news headlines and discuss the company's latest quarterly performance to help determine if now is a great opportunity to buy the massive 40% dip in NIO's share price. But before we take a look at all the recent info in detail, I'm going to ask you to please hit that like button and subscribe. I am the Gen Z Investor, and every single day we talk about the stock market, going over different stocks you can buy or any major market news. And of course, today we're going to focus on the fast-growing Chinese EV company, which is NIO, and I do own a small portion of this company in my high-risk, high-reward growth stock portfolio that is worth around $5,500, and I currently own a very tiny 4 shares of NIO that I purchased back at $45.10, and I'm down 20% on this very tiny position. And I plan to hold on to these shares long term to follow along with the company and see if they can become a proficient leader in the global EV market outside of just China. And of course, a recent headline announcing an expansion to their manufacturing capability to up to 240,000 units per year will really help NIO get to that level. And they signed a 3-year agreement with the state-owned GAC, who will produce vehicles for NIO through 2024 and expand its annual production capacity to 240,000 units, which is absolutely incredible. And of course, at this current point in time, NIO has not achieved this level of capabilities, but going forward, as demand continues to grow, I think NIO will absolutely one day achieve these annual production levels over the next 3 to 5 years if their current growth rate continues for those coming periods. And if we take a look, the company is expanding outside of China later on in 2021, with Europe and Norway being its specific location set for September. So early expansion outside of China is essential for NIO to become recognized in a global scale. And Norway is one of the most EV-friendly countries in the world, so expanding into that market first, I believe, is a very smart decision for the Chinese brand. And currently, they're already building out a service center within Norway, and they have plans to send vehicles there in August for some test runs, and then in September, getting full deliveries out there and on the roads to continue to grow and expand the brand outside of their native home country. And NIO also has plans to expand into 5 other European countries in 2022, and the company has set a goal to sell 50,000 units in Europe over an undisclosed timeframe. And I'm assuming that's going to be between 2022 and 2025. And the company has also done a great job of building out their charging networks in Europe as well. Currently, they're focused on creating 4 battery swap stations in Oslo, Norway for that first official launch into Europe. But they're also working with other manufacturers to expand the NIO vehicles to the 20,000 charging networks they already have in existence. So I believe going forward, if NIO can get this done, their cars are going to be attractive in Norway, specifically Oslo, because of the 4 battery swap stations and the potential partnership with Plugsurfing that will give NIO vehicles access to over 20,000 charging stations all across the European continent. So definitely some great news that the company's planning to enter into Europe late in 2021 and to 5 other countries throughout 2022. And if we take a look at the recent delivery numbers, they have seen some massive year-over-year growth as well. And in the month of April 2021, they delivered 7,102 vehicles, which is a growth rate of 125% year over year. And overall, of their 3 models in production right now, they've delivered over 102,000 vehicles, which is phenomenal. And over the past month, they crossed that $100,000 threshold, which was a major milestone for the company. But one thing we have to remember with NIO is that to evaluate this company strategically, we have to look past just the growing delivery numbers, because NIO is a company not solely focused on manufacturing and selling electric vehicles. They're also providing battery services. And over the long term, that continuous revenue stream is going to lead the company over their competitors in the Chinese and European markets. And that's how the company's positioning themselves in the EV market as a major battery player as well. And if you're unaware, NIO has a very unique system called Battery as a Swap, and they offer a Battery as a Service program. So essentially, with a NIO vehicle, because the batteries can be swapped out for a full charged one at any point in time through one of their over 200 battery swap stations in China right now, you do not actually need to purchase a battery when you buy an EV vehicle. And that's why they offer this Battery as a Service program. And essentially, you can buy a NIO vehicle without a battery and bring down the purchase price by $10,000 at the initial cost. And this upfront cost savings has made NIO vehicles more attractive to consumers relative to their competitors. Saving $10,000 upfront on the initial purchase price can get more consumers away from their traditional vehicles and into a fully electric model. And how this works is you buy the vehicle without the battery, but then when you purchase it, you sign up for a monthly subscription plan for a certain amount of battery swaps at one of NIO's over 200 battery swap locations. And for example, you can buy a $142 per month subscription to lease a 70 kilowatt pack and enjoy 6 monthly swaps every single time for your vehicle. So that's over 1 a week, and you can come into the station and in under 3 minutes, get your old battery taken out and put in with a fully charged new model. And that's what's going to help the company stand out versus their competitors over the longer term. And in the past quarter, their other sales revenue came in at $88 million, which is where the subscription model comes into, which was a rise of 395% over the same quarter in the prior year. And the company has already conducted over 200,000 battery swaps in their current facilities, meaning they've been tested, they're working well, and consumers are liking the service that is available on the market. And of course, this battery swap station is what's differentiating themselves from a company like Tesla, who is already a major player in the Chinese EV market. And the whole point of these stations are that you can do a full battery swap, go from an empty battery to a fully charged one in only 3 minutes. And that point of difference is what makes them stand apart compared to their competitors. And what's very attractive about these stations is that they only make up the size of 2 parking spots. You can fit a NIO Power Swap station in 2 parking spots in a location right now. So currently, it takes up very little space, 1 spot for the vehicle, 1 spot for the batteries, and a car pulls in. The actual mechanics of this machinery will take out your existing battery and put a new one in there that's fully charged, and it's actually quicker than a traditional stop at a gas station for a normal vehicle. And that's going to help them stand apart compared to a Tesla, because right now, even at superchargers, the overall time it takes of 20 to 45 minutes to top up your Tesla's charge is really a drawback for many consumers. So if NIO can actually fulfill their goal of achieving 500 battery swaps by the end of 2021, having 500 different locations to do this for your vehicle in such an efficient manner, I think will really help NIO stand out versus a company like a Tesla or an XPeng in the Chinese market even more than they already are. And of course, if we jump back over to the company's website, they're doing everything they can to provide a growing digital and charger-based network all around the country and even on an international market. And the company's NIO powering stations that are also spread out across the country can charge up a vehicle from 20 to 80% in just half an hour. So these are the stations that look similar to Tesla superchargers and operate in a similar manner. We can see 60% battery charge in half an hour. So if Tesla operates and even at a faster rate, that's still much longer than a traditional battery swap that takes only 3 minutes. So overall, I think the battery swap stations, if NIO can continue to grow them out, scale them, and achieve a great level, will be very attractive and can be a long-term sustainable growth aspect for the company with some great recurring revenue. And they also have NIO Power Mobile, where at any point in time, you can call them up from your vehicle and they'll come and give you a charge, whether it's at home, at work, you're out. So that fear of always needing to have a full battery or running out of charge anywhere you are can actually be reduced. They'll come to you 24/7 and give you a 10-minute charge. They'll provide 100 kilometers of range for a small fee. So right away, you can not have to worry about always being charged up, because in the worst case scenario, if you run out of battery, this vehicle will come, power you up in only 10 minutes, which is absolutely fantastic. And of course, this is their 24/7 on-call valet charging. So from your phone, from your vehicle, you never have to worry about running out of battery anywhere you are. So of course, overall, NIO is definitely one of the most fast-growing, most innovative companies in the EV market. They're one of the top names in China, and they're growing at a fast rate financially once again. And if we take a look at the actual numbers for the first quarter, total deliveries, like we saw, came in at over 20,000, grossly surpassing the previous year, which was only at 3,800. So we can see year over year some major growth, and they're either doubling or tripling the prior year's number. And overall, the total revenue in the quarter came in at $1.2 billion in USD, growing by 481% over the same quarter in 2020. And their actual vehicle margin, which is really important for a lot of EV companies, came in at 21.2% versus a negative 7.4% in the first quarter of the prior year. So a major improvement in their overall margin, in their actual loss from operations, because the company is not profitable just yet, was only at $45 million, which is much better than where it was before in the prior year. So overall, the company is doing a great job and currently has cash and cash equivalents of $7.3 billion in USD as of March 31st, 2021. So they have a ton of cash on hand to fund their growth, to keep up with the losses, and continue to expand their network of vehicles, different vehicle models, and battery swap stations throughout 2021 and beyond. So definitely a very interesting EV company to take a look at on the market right now. They have fallen 42% from their highs, and after this major new announcement, they have seen a major expansion to their total manufacturing capabilities. So let me know down below in the comments if you own any shares of NIO, what your average cost is, or if you're going to buy the dip on this leading EV company. Definitely do some research into them. Of course, there's a lot more associated risk with them being a Chinese brand compared to an American company, different standards, different restrictions, and you have to understand that before making any investment decisions. So definitely speak with a qualified professional, do some research, and take a look at NIO for your own portfolio if you want exposure to the fast expanding EV market, a top player with over 100,000 vehicles delivered, a fast growing charging network, and as well, the company is on a 42% dip from their 52-week high. So let me know down below what you think about the company. Let me know if you like the future of them, if you think they're going to die down, or if you think they have the potential to actually become the next Tesla. So thank you for watching, and I will see you in tomorrow's video.